Another week, another dollar. Maybe I'm counting my chickens before they hatch. But let's go over the covered call I sold on Robinhood this morning. We had a massive green day today. The Qs were up over 1%, which is usually pretty good. SPY was up, I think, right at a percent. You know, who knows these days what's going on? Full blown war in Iran, gas prices are going up, oil's going up. CPI is a little sticky. The CPI is the consumer price index. It measures if inflation is trending up or down. It seems like inflation is a little stickier than we thought. Even then, all the rate cuts, it is still kind of lingering, which is not good for us because our dollars are getting devalued. And as you guys know, that's not a good thing if you are trading or if you have US dollars. But we're trying to end that devaluation by selling covered calls and making some money on the side. So I think last time we did one of these, the account was at 16, maybe. Yeah, we're down a little bit. We hit an all-time high of 16.6. So we're down like $437. Well, that's mostly because of Robinhood. These are our positions. We still got those shares of Netflix that are just kind of chilling here, going sideways. Can't really sell calls on them yet because I don't have 100 of them, but might sell them and start trading T triple Q like I used to trade back in 2022. But I'm not sure if I'm ready for all of that volatility again. We'll see. But we're trading Hood. We're trading Hood. We're bullish on Hood. We had a big green day today. On those big green days, it's good you take advantage of them and start your calls because a 3% day for Robinhood is an abnormal day. I think for any equity that you're trading, if you have a 3% day, that's pretty good. So that means that we're selling your calls, betting that the stock won't go up that much more, right? So as we're talking about, we have a new average cost that I'll share with you guys on the Excel. But overall, we're down 10%, just a little under $1,000 here with Robinhood. And we can average down. We can always buy more shares of 75. I'm overall bullish on Robinhood for a number of reasons. I think we had an all-time high back last summer or in October at 152, and it doesn't mean it's going to go back to all-time highs. If you look at Cisco, for example, Cisco's an interesting company. They just caught up to their all-time highs from 2000. So just to put into perspective, you shouldn't be thinking of all-time highs as a guaranteed because it really isn't. This stock could go sideways. It could go down another 20%. It could go up 50% and reach 200. Who knows? What you got to do is predict price for the next week. And that's what we're doing here with our covered calls. So whenever we have a big green day, make sure you guys take advantage of it. Meta had another green day. They're laying off a bunch of people and the market just seems like they're liking it. So if you look at Block, for example, Jack Dorsey's company, he laid off 50% of his workforce. The stock shot up like 15% or whatever it was. Like it shot up a ton. Let's look at Block here just to show you guys XYZ ticker. Let's look at the 3 month. You see, like we were trading at 51, 50, boom, big news. Look at the spike, guys. Like I don't get it. He was literally replacing his whole workforce or most of it with AI agents and just AI workflows. So the market seems to be liking this kind of move. We'll go back here to our account. And Meta was part of that. We don't have Meta in this portfolio, it's in the other one. Maybe we'll go open it up another day. But let's focus here on Robinhood and what we did for our moves. So we sold this $80 call for $63. And we're just at break even. You guys can see over here, we shot up a little bit. I was down $11 on my position. I was up $6 or whatever it was, $4. So what you guys are trying to understand is your max loss. So whenever you sell a contract like this, you're telling someone that you're willing to sell your 100 Robinhood shares for $80. Like, am I okay doing that? So I'm fine with that because we've been selling calls. We're bringing our average down. If the stock's over 80 or 80 by Friday, we're going to have our shares assigned and we just go and do the wheel again where I'm selling a cash secure put and maybe I get assigned again, maybe not. But the point is, we're making money as the market kind of goes sideways. If you look at Robinhood, we've been trading sideways for a little bit now, at least a couple of weeks. Let's look at the month. You see, like we go up a little bit, we go down a little bit, blah, blah, blah. You can capitalize on these moves even when price is not really doing the whole going up all the time. Because, guys, news shock, we've had a massive bull run in these last 3 years. If we're seeing a little bit of a pullback at the start of the year, then it's what we're doing, guys. Like we adapt to what the market wants. We can't just predict price to go up forever. So, like I mentioned, we saw that call, $80 strike. This is how we're looking for this week. This expires on the 20th, and I'm hoping it expires worthless. Or maybe by Wednesday, Thursday, the contract's going to lose so much value that we can buy it back for $1 or $2, $3 like I did last week. So this is the play that we did this week. We check in on Friday again, make sure it's expiring worthless. And if it isn't, guys, that's fine. We can roll it. So what I mean by rolling it, we are buying to close and then we're selling to open. So we buy this contract back from the person that we sold to. It's going to be at a higher price because price has gone up, right? The underline's going up. Your contract's going to go up because if you're selling a call, it's a bearish position. So you have to understand whenever you buy a call, that's a bullish position, but you're selling it. So you're betting that the stock won't go up past $80. That's your max profit. So if we are in that spot, we'll just buy to close and sell to open a new one. And we can go out and up and strike. So we're still breaking even or making a little bit of premium. Maybe I got to roll it 2-3 weeks out. And that's just the name of the game, guys. Sometimes you get caught in these covered calls. Sometimes you get caught in these cash secure puts. And you have to adapt. You have to adapt. You have to roll your contracts, or you get a sign, you're okay with it, you're running the wheel again. So multiple different exit strategies, but you guys have to understand the max loss with this, right? Back to our trusty Excel, where we're keeping track of our basis. We're keeping track of the premium we're getting. We can see our $63 premium we just made by selling that call. And how this reads is I sold to open, so STO, a covered call with an $80 strike that expires on the 20th. And this is not the best formatting. I'm just kind of scribbling stuff down, and I'll work on this as we go. But so far, just in this game, we've played for a couple of weeks, and I'm up $335. We're bringing our bases down to $81.56 from the $84.91. And I'm not buying shares, guys. This is just premium I've gained over the weeks from selling these calls. So that's why the wheel strategy is so powerful, especially in this market where price is going up, price is going down. You can capitalize on it. So this is our new basis over here of $81.56. We've made $335 so far, given our call that we sold this morning expires worthless. It could go again in the money and then get assigned. It could do a lot of things, but this is what we're counting on right now. It expiring at worthless, and we'll check it back in on Friday or maybe next Monday and share an update with you guys. But this is essentially what we're doing here. We're selling calls, and if I get assigned, I then have $8,000, whatever it is, that I can start playing the wheel again, and I can sell on whatever underline. I can sell a cash secure put, and I'm betting that the stock's going to go up. So it's a bullish position. If we see the market trends kind of start going more bullish when this war ends, when oil starts coming down a little bit more, whenever we see rate cuts, these are all macro conditions that you guys have to be aware. It's not critical that you know all of them by heart. You don't have to be an economist to understand that whenever the Fed cuts rates, people spend more money. These things are pretty basic math and pretty simple logic, but it's important to understand it. So Hopefully you guys enjoyed this little update of the portfolio. I encourage you guys to either watch my options trading video I did some time ago. It goes into more depth on how options work, the wheel strategy, and I'll work on doing a more extensive video with more examples for us. But this is essentially where we're sitting, and I'll keep you guys updated on the progress. So thank you for watching. I appreciate you being here. If you guys are still here by the end of the video, I want to see you guys win, and leave a question if you guys have any of them. And don't forget to leave a like. I'll talk to you guys soon.